Welcome back to Beyond the Cards, your Redbridge podcast with your favorite payments nerds, where we dive into all the fun payment stories and news that you want to hear most. Welcome back, everybody. We've got the full gang.
Hey there.
Long time.
Hello, everyone.
I know we finally got all the French back. Their August vacations are over.
Yeah.
All right. Well, should we just dive right in? Let's get into it. So let's talk about Klarna. Let's talk about Ayden. Let's talk about for in-store buy now, pay later rollout. Coming to you from FinTech Magazine, a story written by Louise Tomset. You know, we're seeing more and more of this, which is buy now, pay later becoming a brick and mortar mainstay, as a lot of these acquirers are partnering with these providers like Klarna, obviously being one of the leaders in this space, to really get out and get into stores and offer that buy now, pay later option. It is really the fintech-ification of what many of us older consumers will remember in the US as layaway. Right? You'd walk to that back counter at the store and say, I need a little bit more time to pay this off, and you would make your payments directly to the store. But now we're definitely seeing the push to get buy now, pay later into stores. What do we think about this, guys? I have a lot of thoughts.
I've seen it more and more lately, not only with Klarna as well, but I think this will it's a great marketing because it will drive more retailers over that are taking the buy now, pay later online for people to come into stores and do their day-to-day shopping. So, it is a marketing grabs for other merchants to come over to Ayden. So they think it is and more traffic basically on the Klarna too, I'm sure. So they think it's a good move. And to me, I think it is a good move as far as gaining business.
Yeah, definitely. I think so. Sorry, go ahead.
I was just going to say, I agree. I think it opens up, as a lot of them are marketing, they're trying to attract those customers that may not be able to do the full purchase, or, it offers a way for customers to add more to their cart, add more to their purchase. I don't know if it's a great thing for financial, when you're thinking of younger folks and their finances and how much debt they may be taking on, but definitely looking to attract another group of individuals for their purchasing.
Yeah, you're right.
No, go ahead, Shara.
No, but you're right. You definitely got it. Of course, we are talking about a new customer experience, having in mind that more and more merchants want to digitalize also this shopping experience in store. So this is something very exciting, because we are also saying that we are more and more aligned with some innovative also alternative payment method, like what we see also in Asia, for instance. But of course, like as you mentioned, in terms of debt also for the final consumer, we can of course discuss the potential increase of consumer debt, and who will not be able also to make very who will impact also their purchasing decisions and more impulsive spending. So we have to think about all that, of course, in terms of consumer experience.
I think one thing I would... Oh, go ahead, Dan.
Yeah, I think it's getting out of control. I think to some extent, right, we've talked a few times about kind of the lack of regulation within this space and the growing concern that many consumers are taking on far more debt than they are able to pay off. And I think this is one of those things that really kind of compounds the issue, right? You make a credit card purchase, it's singular, you kind of see it on your credit card statement. I think this can be a little bit more pernicious since it's broken up into payments. And so it's harder for consumers to actually see how much money they're spending at any one time. The other part that I maybe am just a little bit worried about as well, and I would have to see the full integration to see exactly how this um, plays out. But right, we're seeing also a move away from QR codes because of scammers starting to use more and more QR codes. We actually got a tip from one of our previous guests in the Chicago area that the parking authority is no longer posting QR codes because of how often people are committing fraud by just slapping a new QR code. I think that since this is a dynamic QR solution, there's probably a little less risk, but it's one of those things where could there be some potential risk exposure there? I definitely think so.
That was a point I was going to get to next. Like with all the the newbies coming in, it's driving to a certain generation, or or to just a certain environment where, what if I forget, like, oh, I updated my card or anything else, or I just wanted to buy this and I just decide not to pay it anymore? Who at that point takes it? Opens you more to risk exposure, I believe. But who takes that? Who does it fall on outside of Ayden, the merchant? I believe it would be on the merchant, but how do you handle it? How do you control that?
I don't think they do, right? Like I think the any late fees, any penalties are done by Klarna. So, but as a consumer, it gets kind of hard for you to be like, oh, it's Klarna charging me the late fee, not the store that you bought the item at, right? Because, you just think, you don't really think of Klarna as the payer, or not the payer. You don't really think of them as the player when you're the consumer, right? You're making a purchase at a store, when in reality, you're making a purchase with Klarna, which is not actually the store. And I do think that merchants need to consider as well, right? Like, what is the cost of acquisition of that customer? We know buy now, pay later is going to increase the cost of acquisition for those customers. And are you potentially swapping and making consumers who would have paid for that entire purchase themselves using a likely lower cost instrument, are you encouraging them to use buy now, pay later when they would have paid you otherwise, right? Like,
Yeah.
I think you have to have just really spot on customer metrics, details on that to understand exactly how you're going to implement that. Because I will be the first person to admit, I think I've said it before, I can totally pay for certain purchases all at once. I'll usually put them on a debit card too, because I'm a nice guy and I know it's cheaper. But you give me the buy now, pay later option, and I take it. And so I, from being a high value, high margin customer, I switched to being less valuable because I just picked the most expensive payment method, usually for the merchant.
What all are you adding to that? I mean, are you really going to see average tickets increase so substantially that it's worth it to drive those, let's just say, debit customers to a buy now, pay later option that's going to be so much more costly for the merchant? Just like you said, you have to just know your customer dynamics and really understand your cost components before you just offer that, because you could just be working yourself backwards.
Oh, well, we can talk about this some more, but let's talk about account to account payments in the UK. This was a press release put out by Visa, and I think it's very interesting. And the reason why I think it's very interesting is, I think from when you're a payments nerd, as we are, I think we look behind what certain products are. And I think we get a lot of questions like, but are Visa and MasterCard really going to be relevant in the next 10 years? Like, oh, aren't there all of these payment methods? And isn't there all of these account to account payments now? And this and that. And I'm like, uh, yeah, because that technology is all based off of Visa or MasterCard, right? And I think this is just another strong example of the fact that if you're not paying attention to Visa and MasterCard and what they're saying in terms of they are a network, not just a payment method, then you lose sight of things like this, where Visa is saying, hey, we're entrenched in the banking system, right? Like these rails are our rails. Any other thoughts from anybody else on
some thoughts
this
here.
press release?
Yeah, some thoughts. Can you hear me, guys?
Yeah.
Yes.
Yeah. Okay. So yeah, some thoughts about this account to account. I think, as you were saying, is super interesting because Visa, Mastercard, they are sticking to their market and even increasing the market share with this new trend of account to account payment methods. Now we know that Visa acquired a few years ago Tink. So now with Tink, they are basically building part of their network, and they will still be around. So my question now is more about the business model that is behind this new payment method, and in particular whether there will be interchange. And we'll discuss about Wero. We can say a few things about that as well right after this article. But very interested in the business model that Visa will be building here, as you know, part of their strategy of being a four-side model, whereby they are remunerating both the acquirer, but especially the issuer. So the issuer that is now contributing to this new network. Well, yeah, big move, very interesting. Starting with the UK, the biggest market in Europe in terms of open banking. So yeah, very to see the evolution there.
I'm curious to see how that dispute resolution process is going to go with the account to account dispute. So if I wanted to dispute something that I directly sent to you, because I'm guessing it is like chase to chase, Zelle to Zelle, however, in that kind of model, how do I dispute that? What does the process looks like to dispute something that is account to account? Because what am I going to say? Would some of those disputes be like a defective item or something like that? Basically, like services really not rendered.
Well, I think that.
Thing.
Well, I think in general, one of the things that I see with a lot of this account to account and payment, or these direct pay by banks that get payment options that get ran over the Visa MasterCard rails, right, is they're very selective in who you're allowed to pay, right? So, you know, I think here it even mentions like bill payment, right? So obviously going into the safest kind of territories first. And I think that's really, it's smart to some extent, right? You don't want to be opening it up everywhere, right? You know, I think we've even seen on Zelle, right? They still struggle with fraudsters on account to account transfers. And so there is some of that. And at least there is sounding like there's a little bit more protection in there, but really they're going to keep it limited to things like utilities, rent payments, etc. Right? These really safe, secure methods. Although I wouldn't be upset if somebody fraudulently paid my utility bill on my behalf. But, you know, typically you're kind of lower fraud instances, because I think they are a little bit more wary of that.
Yeah, okay. So this would kind of be like an industry basis players when it comes to implementing this 8A process. So that makes sense. That makes more, that's more safe, as I say.
Yeah, but challenging good old Visa, good old MasterCard, the OGs on the block. We had some really interesting news coming out of Europe. which is, and you've heard it first, people. We're saying it's pronounced Wero. But we have a brand new payment method launching in Europe, really designed to take on Visa, MasterCard. They're heralding it as a sovereign payment network. So really interesting that Europe is really trying to take on the established players from the US.
I was wondering how to say that name of Visa the whole time. I was like, how do you say this?
I think we'll get used to it, but yeah, the name, I don't know what the name exactly comes from. Maybe Wire, maybe Western, we were saying. So the interesting thing here, I think, is that for once there is the intention on the project of building a real alternative, domestic European alternative. The downside here is, on the one hand, that the initial project was to align most big European banks, while at the end it's mostly, although it's good enough, but managed by Germany, France, and the Benelux. So Spain, Italy, and many of the other countries are not really included in this payment method, but still, it would represent a big portion of the European countries. So the purpose here is to build a new scheme that is not managed through the Visa, MasterCard rails, nor domestic card rails, nor even SEPA rails. So the objective is really to build something new. And as most of those local payment methods, they start with the P2P. So the idea is to start with the this replacement of the cash use cases, giving money to your friends or paying some shared bills with your friends. So yeah, curious to see how this evolves. And now it was just launched this week, officially launched in France and Germany. And it's expected to become a payment method to be used on merchants, I think, by next year in Germany and probably in a couple of years for France. So still a long time to see the real impact of this payment method, but it's interesting initiative.
Well, I think the interesting thing is they're not starting off from scratch, right? Their acquisition of Ideal, which is wildly popular in the Netherlands, right? And then also the fintech Payconique, because it's probably pronounced that way because it's from Luxembourg.
Pretty sure of that. Yeah.
You got it.
They have obviously some experience from building on what those especially Ideal network has built up and the loyalty used there. I think the interesting thing that gets called out in this article is Wero will be great domestically, but obviously in the age of digital commerce, of e-commerce, right, the second you step outside of that domestic territory, they haven't solved for the cross-border aspect of it. And that, I think, is going to be the major challenge, right? If we look at players like PayPal, right, while PayPal is maybe waning domestically in its home turf of the US, where it's just accelerating growth and has been doing extremely well, is cross-border payments. It's where Visa and MasterCard excel, right? If you're from wherever you are in the world, if you have a Visa card, you can make a payment to somebody else. And that, I think, is really the challenge. And it's great to have a good new domestic payment method to compete. And I think it will have positive impacts. But the semi-nationalist approach, if you can't, be paying somebody who's outside of that particular zone, and Europe is a big place. Not every European country is part of the EU. There's some challenges in Europe, as I'm sure we know, like obviously with the war happening in Eastern Europe. So there's challenges of how broad does this payment method go, and and more importantly, like, Wero, we believe you're a portmanteau of something. Why haven't you told us what you're a portmanteau of? I gotta know.
Something else that disturbs me a little bit, I don't know whether it's the way Wero claims to be also, whether it's only the article. It's really this fact that the idea is to compete also US rivals. But before competing with US rivals, the problem I have generally, and it's more a personal point of view with this kind of unified payment method and unified payments, is also the impact also on the competitiveness, also on the competition between other and smaller brands, which are bringing also some innovation. So, and the fact that it does not, I'm not sure that there will one day compete with any US rivals, but rather with, as you mentioned, also local and really small payment methods.
Intriguing concept. We'll have to see. We'll have to watch. I think everyone's always thirsty for a new payment method, and then when it comes to actually rolling it out, there's always that big challenge of adoption. I mean, I think we're seeing that with like the Pays wallet, right? Like, it's available, but no one's using it yet.
Do you think
Only a few.
eventually Visa and MasterCard will just come in and try to buy Wero?
Well, it's
do you
Europe,
think?
so no. I mean, they might try, but I would 100% believe that the European market would block the sale or say that it's
That they can't.
like not illegal.
Yeah, that it's
Yeah. Europe's good with that type of stuff.
Yeah,
So,
definitely. I think that the EPI is really meant for not being absorbed by Visa or MasterCard. So it's inherent, to the EPI's ADN also.
Yeah, but just one comment there. As we were seeing when discussing about Visa account to account, it doesn't mean that they cannot build their own system to compete directly with Wero, on the same conditions, local rails, same of cost behind, and bring this innovative approach that Visa and MasterCard, I must admit, usually bring into this ecosystem. So I would expect Wero to be really challenged by Visa.
well, should we wait here? Should we don our tinfoil hats and say that Visa's aggressive push in the UK is to create a perpetual rift between the UK and continental Europe? I mean, if you can't get Wero to be able to make cross-border payments into the UK, right? That's such a huge market. And I'm going on record of saying I believe Wero is Western European. I think that's where the W comes from, but we'll see. I think it's maybe a kind of a dual challenge of, if you can create a big enough rift between countries that participate in, we'll call it the Wero area, which I believe is overlapping with the EEA. If you can create a big enough strife between markets that are considered domestic and then, international markets, but they're in such close proximity, like the UK, it will drive down adoption to some extent because there's so much commerce that happens between those countries. Intriguing, but that's just me always putting my conspiracy hat on. So, furthering the competition here between Visa and MasterCard and the traditional payments landscape, we have your traditional, one of the biggest movers and shakers in the American economy, Walmart, partnering with Fiserv to offer instant bank payments through their partner Fiserv, which honestly is, to me, huge. reporting here says that the service is potentially going to tap either the new FedNow rail or the RTP network from the clearinghouse, which personally, to me, it's kind of what I've been waiting for. I hear constant news about instant payments and FedNow and RTP, and at least from what I've seen, which has been somewhat on the treasury side, it's corporates making payments to other corporates across these networks. There's been no consumer crossover, which they can tout, oh, we're moving so much money, we're doing so many payments. But this to me is a real mover.
Yeah, I think this is a big deal, especially with this being Walmart. Kind of like you mentioned, one of our biggest players. They tend to be always, pushing with new and innovative solutions if they just want to create it. And given their, demographic across all sorts of clients, I would think this will be huge, knowing how many people are probably paying with, their debit. So they can easily just convert those to those instant bank, which is going to allow for them to, there's no transaction delay. Also think of the overdraft issues that are always kind of a large pain point when you're in that side, and also be so much less costly, right?
Oh, 100.
And I'm not actually surprised that this happened, actually, because of all of the payment methods that they currently have now with Walmart Pay. I'm a person that uses Walmart Pay currently today. Every time I go into Walmart, tap on that app and pay either. Currently, I actually pay by bank. Right now, they do have in some places that you can currently pay by bank or connect your bank and pay. So I either do that or card, and it's very much easier for me to just scan it. So it's very, very easy and convenient.
So you do that at checkout in the store, even
Yes.
right now?
So currently, if I do it at the store and online, so if I go to Walmart, instead of course, they don't have Apple Pay.
Right.
They have the Walmart Pay. So you would actually do the QR code scanner, and it will take you to the Walmart app, and you just hit pay, whatever it is currently set up on, whether it's your card, PayPal, a gift card, or they have this thing called One Pay, which is actually a Walmart card in certain ways. You can pay just right then on your phone. And I did see on social media how everyone was upset that they do not take Apple Pay, but they have other payment methods that you can do. All it takes is just downloading an app. So I'm not surprised that this is coming, that this is here.
Yeah, it's definitely an extension of their Walmart Pay by Bank solution. And I think really the evolution of it, right? And we've seen other retailers offer these pay by bank solutions. The challenge has always been in this arena is that they will route over either a regional debit rail, or they'll route over the legacy ACH network, which means that you're not going to have that payment cleared for a day to 3 days. And in the face-to-face retail world, you need that instant payment, right? Because for a Walmart, the risk of a customer not having the money because they're taking 1 to 3 days to settle, it's just too high, and you probably only offer it to certain people, etc. So you're not getting the true penetration rate of that instant gratification of, okay, I have $100 in my bank account today. This purchase comes to 35. I'm gonna pay it. Okay, I see the 35 gone. I know how much money I have left, right? I think there's so much value in the finality of a payment Whereas, if you use a credit card or signature debit card, that transaction is going to pen for a day or two and leave you a little bit in limbo of how much money do I really have?
Yeah, that's very good because it saves the customer and the merchant. One for NSF, and then two for overdraft fee for the merchant, for the consumer, if that bank allows the transaction to go through. So the timeliness on that's perfect because I'm not set to a lot of risk anymore. That cuts that risk down in real time.
In real time. The only thing I'm wondering also regarding that is rather the performance of such transactions. Of course, it's a good idea because of all that you mentioned, and I'm pretty sure that this will be highly adopted, of course, gradually by all the consumers, especially in some verticals like Walmart and so. But I'm wondering about the performance because, for instance, but of course, it's another problem. But for example, we have the open banking solutions in Europe, which can be compared to pay by bank. Also, even if there are some differences, but when we see the adoption of pay open banking saw some problems in terms of performance, and mainly because all the banks were there were some technical error and so on because of the APIs that were not very efficient and so on. So I'm wondering about the performance of such transaction because of course you can pay instantly, but at the same time, if the payment finally does not is not finalized at the end, it can be a little bit messy.
Well, I think this is where probably Pfizer is playing the biggest role in the whole equation is, since we don't technically have open banking here in the US, I think having that acquiring partner as the intermediary and also like a very large acquirer, this isn't some brand new fintech startup that might be gone in a few years, right? I.e., Synapse of all bank, right? I think that there's probably a higher level of trust in that connectivity and the responsiveness across that network. Now the question will be, right, is it Fed now? Is it RTP? Is there switching? Is there redundancy baked into the solution that says, primarily it's a FedNow payment, but if FedNow is down or that bank is has a latency in response time, it automatically cuts over to RTP? I don't know. Pfizer, if you're listening, please reach out to me. I'd love to hear more about this product. But I think that that's probably helping solve that gap, as it's not so much having to connect to multiple banks and their open banking solutions and support it. This acquirer connection, and who's ever connected to this acquirer, which is probably a lot of banks at this point, I think that's probably where you get more of that security.
Definitely, I get you. And I'm wondering also in terms of pricing, because at the end of the day, of course, you're out of everything regarding network fees and so on, because you definitely have a relationship and you delete and you bypass the networks. But what will be the final price at the end? I mean, is it, of course, it's a solution that shall bring more savings in terms of costs for the merchant at the end, but is the cost really, really relevant?
I mean, if Walmart's into it, probably yes. Now that the caveat being realistic here, what Walmart gets is probably not going to be what everybody else gets. But I mean, I think it's definitely starting to drive. And I mean, honestly, I think it's a great potential solution. It's probably going to be a huge competitive advantage for Fiserv overall. Probably quite the feather in their cap. I'm sure they are not the only acquirer rushing to get these types of solutions out, but I think probably the first big movers we'll see in this, it won't just be Fiserv. I would imagine that the other large acquirers like, Global Payments, your Chase, your WorldPay, they probably are not too far behind on these types of solutions either. But let's keep an eye on it because it's definitely one that should be interesting. And I would think, even if you get 5 to 7, maybe 10% penetration rate, I bet you that translates into multiple 7 figures at the end of the day.
Definitely.
All right. Well, let's end with talking a little bit more about some competitive practices and playing nice in the sandbox. It finally happened. The Department of Justice has filed a lawsuit against Visa for illegally stifling competition within the debit market.
They're saying they're being bullies in so many words.
Well, I think long-time readers, people who followed us for a long time will know I penned an article when the first probe came out all the way back in 2021, and it was announced that they were being probed. It's probably something that has been a long time coming, and it's kind of sad that it's happening this late in 2024 because come January, will it be the same Department of Justice, and will this lawsuit continue forward, or will it get dropped? Obviously there's a lot of political instability that can change that. But I think the most interesting aspects that are being talked about here is not so much the merchant to merchant kind of competition, right? I think, and at the end of the day, I don't even know if that's a strong argument to say that was truly stifling competition. I think, and I'd be interested to see what happens here, is I think it comes down to the bank level, right? Were incentives being given to banks to not use other debit networks over Visa and Visa's network interlink?
That would be a good question because I would think so, and I'm just reading between the lines here, as we read upon this, even with different type of, through different phases, but you're saying either you use me, or I charge you more. But on the other side of that, if I continue to use you, what do I get? Do I just get, I keep my fees the same, or do I get a little leeway here? Not just, I'll hit you with higher fees. Like, did you do some type of incentive there? Like I said, if not, that just sounds like a big bully.
Well, I think it's really, again, and I'm going to go back to the bank side here, right? Everyone can kind of compete when it comes to merchant-specific incentives, which is what is being alleged here, have taken place. I think, though, if you want to kind of cut the competition off, at their feet, you just don't even have banks issue cards that have these other networks. You just say, I'm going to pay you an incentive to not select these networks as options to be routable for your debit card transactions, right? And if you're cutting down the market share at the issuing level, that's where you win, because it's like, well, now we don't even have to cut really great merchant incentives because there's just not a lot of our competitors out there anymore.
Right, there's not. But I guess when I was reading this, I was like, is this a surprise that we see that this is coming? This lawsuit has been filed since the last lawsuit that was denied recently, although it was between Visa and MasterCard. But it is a surprise that there was another lawsuit that came down on Visa right after that.
Well, if you're MasterCard or if you're Discover, you're probably like, yeah, no one issues our debit cards. No one's picking us for
Right.
debit cards,
Oh,
right?
right, yeah.
Maybe you're scratching your head of being like, I wonder why we're not proliferating as strongly in the debit card market as Visa is. And from a fee perspective, right? There are more penalty options when it comes to Visa, signature debit transactions that can occur, right? There's transaction integrity fees. If your transaction downgrades, you're going to get pinged with an extra 10 cents. That's not always with other networks. So it's one of those challenges of, even when we're talking to people about like, are you including all the network fees in the conversation of comparing debit networks, or are you just focusing on interchange? Because to some extent, people will say, oh, this is a moot argument because interchange is regulated. So it's 5 basis points and 22 cents. It's not that big of a deal. And, it's always the network fees that come in.
I think my question too is, this is something that seems to be they've been working on for some time, but what is actually the consequences, or what are we thinking is going to be the outcome? I think the DOJ is wanting to have Visa's alleged practices stopped, they're saying, right? But that's a pretty big ask.
Yeah, what's the remedy?
Right. So how do you overcome this? Is it just going to be where it moves into some type of settlement? Personally, I hope that's not what happens, because those don't seem to go anywhere. So are there going to be rules set in place, which would, we had the Durbin Amendment, for example. So is there going to be some type of stipulation in place? Yeah, like there has to be such and such in this category, and you have to allow for this. I think we're seeing some of that when we're looking at routing and preference. But again, Visa's just so massive, that they can technically, they do go behind the scene. We don't know what they have in terms of their relationships with the banks and the fintechs. And so what's the end goal?
And then
that's
2012. So according to this, they've been doing this since 2012.
Well, yeah, definitely. I think Chelsea, your point is very salient of like, okay, but what's the remedy? What is there going to be a forced divestiture saying like, okay, banks, you are picking, let's say, Interlink and Maestro, right? You now have to give so much of your business to this debit network, so much business to that debit network, right? Like, what is going to be the breakup of that market share when it comes to routable networks? And also, at the end of the day, like, we'll sit back and we'll evaluate, was this really good for business? Did this really drive competition, or was everyone kind of holding hands, waiting and being like, oh, well, we'll also just be expensive too, because you're all used to things being expensive, so I either don't have to be less expensive. But I don't know. We'll see how this Fiserv article plays into everything, because then if you drive the competition from the pay by bank side, then maybe we will finally see some changing in fees. So Definitely more to watch. We'll keep an eye out on the filings and see what evidence starts to get released. If it does get released, hopefully it's not all under seal.
Hopefully, I'm curious. I'm curious to follow this story. Actually, this little lawsuit.
Well,
I'm
we
invested.
beat up on the networks quite a bit this episode, and I think it's high time we maybe shift our attention to the kind of the wallflower in the conversation, which is the banks. So I think, this part of the show, we really want to talk about rewards cards. It's been on my mind for a hot minute. And, from our position as people who analyze data in and out all day across various different merchant verticals, the proliferation of high-end rewards cards into the market has been increasing just about every single year. The high-end rewards get a little bit greater in the terms of card mix, and your traditional credit products get a little bit smaller. And, from a consumer standpoint, you're like, oh, great, I'm getting 4% cash back on this credit card. Or, oh, hey, I signed up for this card because now I can get into this super cool airport lounge. And part of my problem with this is, one, are you even deserving of that product that you're being issued? And two, you are inherently playing a hand in increasing the cost of goods because those cards are the most expensive. But it's not a consumer problem. I'm not trying to victim blame here. I'm a progressive guy. I'm not blaming the victim. But what I'm blaming are banks getting a little bit aggressive with their issuing of these high-end reward cards.
I think so.
And
Yes. I mean, everyone has a rewards card now, it seems. And I think you mentioned earlier, rewards cards used to be, more of a rarity. It was something that you would have on your American Express, right? Or you would later use it, for certain large purchases. And I don't also think there were as many, I guess, as many. It's even though I don't really know if people truly use all those benefits that they're getting from a rewards card or if they're even really worth much. In my opinion, there are some that are and some that you're kind of like, oh, I'm never going to use that, or people forget about it. So I think they're definitely issuing them to a much broader audience.
Yeah, I mean, let's look at it historically. And, like when I was getting my first credit cards, right? Who would issue 18-year-olds credit
Right.
cards?
Everyone just got their first credit card through the bank, essentially, so you had overdraft protection. At least that's what I always thought.
I mean, listen, I feel like the easiest credit card to get when you were back in our day was like a store credit card. You'd go into like a Gap or a JC Penney's or something like that, and you would get hooked in on the you need to start building credit somewhere. The banks aren't going to issue you a credit card, but we will. And of course, it was like 26.9% APR and you had like $100 limit, but it was your first kind of break into building credit and then being able to go and get maybe a more flexible credit card from a bank. But even then, you maybe had a student card that had a credit limit of $1,500. It wasn't until you really got some earning underneath your feet that you were starting to get credit cards that would be like, okay, now you're eligible for like a $10,000 limit. Now I feel like we're offering $10,000 limits to younger and younger customers, and even while qualified customers are getting more expansive credit limits and tapping into those high-end rewards. And when we look at what interchange rates have changed the most over time, it's rewards cards. They're the ones going the fastest and the biggest jumps. And so if you're a merchant and you're sitting here being like, I want these cards to be less expensive, and you're trying to beat the networks up over this. The networks to some extent are like, we're just doing what we're being asked to do. And we look at it from the bank side, right? What happens when you start issuing more of these reward cards to perhaps less qualified individuals? You get higher write-offs due to bad debt, but also your chargebacks become more expensive too. So, if you're an issuer, you're saying, but I need a higher interchange rate to cover my costs. I have to give out all of these rewards and I have to pay out these rewards. Also, I'm incurring higher write-off debt, and fraud is becoming more expensive on these cards. So I constantly need a higher and higher interchange rate. And there's seemingly no end in sight to this.
Yeah, I see what I understand from what I understand, because we're not very used to that kind of cards also. But what I'm seeing is that it's a vicious circle at the end.
Well, and that's what's so intriguing to me by cards in Europe, right? Like American Express operates a lot differently in Europe than it does in the US, but it's like, is that why American Express is used in Europe? Because it's the only credit card that gives you more frills and perks, because they're not regulated by the interchange rate cap in Europe.
I was just about to add that it seems like that's when the increase of all of these rewards cards happens, when the interchange cap came into place. And so the banks and the issues had no choice but to market more rewards cards in order to cover their costs. That's how I feel that's when the spike happened. I don't know if I'm totally off rail there, but looking at it, that's why.
I don't think you're entirely off base. I think if you look at, if you're an issuer, right, who's your competition? Right? Other banks, American Express, right? And if you wanted to eat into the American Express market share of all of these fantastic, benefits of holding a American Express card, you have to compete with better and greater rewards. And I think it's, part of the issuing market competition is who can give the best rewards. Like, if you're only giving 3% cash back on this array of purchases and Bank B is giving 4% cash back, well, all of the consumer finance forums are going to say, well, you should be picking Bank B, because if you're still going to spend that amount of money, you might as well get the 4% cash back and not the 3% cash back. It's a better value. So I guess my kind of thought process on this is, are we all unwittingly playing into the game? Like, are we all to blame?
We probably are, because depending on the type of reward, I'm taking it.
Not me. I stand in solidarity. I do not have a rewards credit card.
I have the Marriott Bonvoy, and that's really it. It's like, that's, of course.
So, guys, my humble European opinion then, there, as Shari was saying, there is no rewards here apart from American Express and a very specific case like commercial cards. But I would say that, I don't know, I'm not super fan of high fees, that's for sure. But at the same time, I must admit that regulation has probably been killing this business in Europe for a few years. And actually, capping the interchange at the end of the day, what that produced was the the rise of new payment methods, which are much more expensive, like the buy now pay later or all the other local alternatives. At the end of the day, financial institutions are finding ways to make money, and I think it's probably the same in the US and anywhere else. It's like you're capping the debit network, the debit interchange network. So now you need to find other sources of revenues, and you can explore, and at the end of the day it will end up just increasing the total cost for merchants. And so as a customer, you're just taking what is more valuable, value for money in your view. So I don't know, I would think my opinion here is that regulating is probably not having the effect that is the expected effect of reducing the total cost for the economy in general, for both merchants and consumers.
Totally. I mean, I had a bank the other day tell me, well, we only issue rewards cards. And I was like, what? First of all, that cannot be true. I don't believe you. Second of all, how blatant, right? Like to be like, well, we're only issuing the cards that are like 2.6%. It's like, okay, I can maybe see like some issuers, right? Like if you were like a high net worth issuing bank, okay, I can maybe get that. But if you're a big every American bank, like to say that you only issue rewards cards or at least 90+% rewards cards, that makes me scratch my head of being like, are you issuing credit to people who are not worthy of that credit? And I think one of the challenging things as well is, especially when you're analyzing interchange, is you have the spend qualified and the spend not qualified categories. So you literally have interchange categories that bump up once consumers spend money. Like once they spend over $50,000 on their credit card, it bumps up to an even higher rate of interchange. And I think that's where we're either going to see a brand new interchange category get created for like these ultra high spenders, but I think there needs to be some sort of reining in of, well, maybe we need to make the traditional category bigger, right? If people are spending more and more on credit cards, well, then maybe not everything needs to be a signature preferred or an infinite or an enhanced or world elite card. Maybe the paradigm of like the baseline is wrong, right? Maybe that needs to be reevaluated and say, all right, well, in your issuing portfolio, most people are spending $35,000 a year on a credit card. So that shouldn't be a world card. That should be just your standard vanilla credit interchange rate. I guess my point here is are we sometimes advocating or chasing the wrong angle? And should merchants and the greater ecosystem be advocating that the change also has to come at the issuing level? It's, you can cut interchange rates by 10 basis points on every single category, but if the issuer is just going to say, well, I'm just going to issue 95% rewards cards into the highest tier and just give everyone a rewards card, did you really accomplish anything? Because they just cut the bottom out.
Right. And the fact that you're giving everyone else, I think they need to reevaluate you're correct. What is considered this, what is considered that, and make a more traditional than a more signature elite.
Yeah, like I think back to just even like small business cards. Like remember when they introduced the networks introduced spend levels and tiers?
Yes.
And we finally saw the stratification of that. And we were like, oh, dang, everything is basically tier 4. And then when they came out with tier 5, we were like, well, I wonder what the split will be on this. And then it turned out tier 4 and tier 5 are almost always the highest volume items. And it's like, okay, well then if everybody is a tier 4 and a tier 5 and
What
no
is
one is a
tier
tier
1?
yeah, like
Yeah, like
no one is a tier 1.
how do you classify these tiers? And once they get there, and okay, what do you do? I don't. Yeah, you're right. There's too many tier 4s, tier 5s, too many signatures, world elites. What happened to the regular traditional tier 1s, tier 2s, and you rarely see sometimes tier 3.
Well, and it's like if you're going to be if you're a small business and you have a tier 5 card, why don't you have a purchasing card? You know, like why? I mean, honestly, I would probably keep the small business card because if you're a tier 5 small business card, that's 3% interchange, right?
But do
But
they even know?
no, and of course they don't know, right? Like I
Yeah.
don't think anyone. I have a tier 5 business card, right?
What is this qualifying at? Can you tell me?
Yeah. Can you tell me? That would be me if I owned a business. I'd be like, I know what my interchange rate that I'm giving you is. But again, like it's like, okay, well then maybe we need to be looking at the issuing portfolio, and of course that challenges banks to do something that they don't want to do, which is reduce their issuing revenue. But I guess my point and the big long story of it all is, you know, it's great to press on all of the levers that we've been seeing people press on, you know, pressing for more regulation, pressing the networks for reduced rates. But in my opinion, the person who's almost gotten away with not getting any light shined on them are the issuers.
Yeah, because they play a part in it somewhere.
They're arguably the biggest player that's not being talked about. Until now, because we're payments nerds and we think about this. Well, I think it's been a pretty rousing conversation, if I do say so myself. And I thank everybody for joining today and joining in the conversation. Of course, if you like what we're doing here, please like, subscribe, share our content with your friends. And who knows, maybe one day you'll find us beyond YouTube.
And put a comment. Let us know how you're liking it, your feedback, and if you have something you want us to talk about, let's talk about it. Let's chat.
Let's do that. All right. Thanks, everyone.
Bye,
Thank you.
everybody.
Thank you.
Bye.
Thank you.
Thank you. Bye.